morning, traders. Welcome to the TMT strategy video on gold for January 3rd, 2017. Alright, I put out three sets of videos, one for the indexes and indicators, one on crude oil and its indicators, and now on gold. Very excited. I think these asset classes are going to be heavily traded and very exciting to trade. So you really want to know what's going on behind the scenes. This is more of a, I'd say, not a day trading video, but it's going to be a video on gold itself, where I think the markets are headed, at least in the near term, 1 to 3 months out, let's say, on gold in particular, this video. So let's get right to it. We have a lot to cover. First thing I like to do is always do a top-down approach. I like to see where the smart money, where the money's flowing in and or out of this commodity. And right now we look at the commitment and trader reports, and if you've seen the crude oil and my other videos, you know I'm a big fan of the COT report, which is free if you are interested in doing so. Commercial traders, smart money, large specs, dumb money in this particular report, and the small speculators don't even bother looking at because they're always wrong. Right now, gold, we have the large speculators. Now these are producers that need money, that need to hedge of what they're taking gold out of the ground. So that is a pretty good good information if you're getting the producers, let's just say here, the most shorted pretty much here all of 2016, saying that they don't think gold prices are going to go any higher, and they're hedging against what they're taking out of the ground. That's significant information. Now, it's not a timing tool. Mind you, it is not a timing tool, but you get 2, 3, 4 consecutive bars, and this is weekly bars. You have to realize that, you know what? These producers think now that that gold may have bottomed. Okay, you could see this trend of higher highs and higher lows on each bar here. Okay, you get a couple, you get a day or so, that 2 or 3 weeks that they get higher. But look what's happening now. Since the start of 2016, now we're in the start of 2017 and still climbing. So at one point we're going to be looking for a bottom in gold. Now, gold is notorious for flushing out the weak hands, and I've mentioned this in gold many times the last few months. Watch out. I think it makes one more low. I think it's not done yet, etc., etc. So you have to use caution, but it is getting better. It's getting into a point where I'm looking for a big washout here, and we'll show that to you in the charts in a second. Next, another good sign is the bullish percent GDM, right? It's a gold miners index based on a point and figure chart. And this is where right now we have, at one point we only had 28% on longs based on a point and figure chart, right? So this is really another good sign where we may be looking for gold to basically bottom here. Okay, now I wouldn't mind seeing even one more sell-off, getting into something like this, and then an explosive move up like this, like we had here. Okay, and I'll show that to you in the charts. But again, recapping, commitment and trader reports showing less and less producers being short, thinking that they see prices going back up again. Bullish percent GDM, again, another good sign for gold that it's in a bottoming phase. Okay, I think that gold is actually in a second stage bull market, but it needs to hold the low of 2016. Otherwise, I think gold's in trouble. Here is the GLD, where the money flow is, right? We want to see where the money flow is, and you can see, I'm going to just move this up, and you can see here that money was flowing into GLD pretty much all year, right, until right about here where we lost it. Okay, where we had the distribution right here. We tried to rally, we filled the gap, and that was it. And then gold now is on a downtrend of lower lows and lower highs. Not even a question. You could see how real negative this chart is. Now, it did alleviate this bearish symmetry of lower lows and lower highs, and you could see we had bear flags pretty much all the same. And then now we have we're back above the 20-day moving average. But this is where the but comes in. I do think that if I scroll down now and I want to show you where the money flow is, look at what's happening with accumulation distribution line. Okay, we're below the 50 pretty much all right until when we sold off, right? Just before that, actually. So you could see that once we start to move higher, this actually is a good forecasting tool. Here's the on balance volume, and here's the chalk and money flow. just still negative, real nasty negative. And here's the money flow index, which is starting to uptick. You could see that here from the lower lows and higher highs and higher lows. So that's also a good sign. But I think, from based on past experience, I think gold will flush probably one more time. And even if it doesn't, there's plenty of room to the upside that you guys can take advantage of. But here's the Huey Bug Index, the weekly chart. And you can see here a lot of upside headwinds, 201, 206. You got the 200 week moving average, you got the 50 week, and you got the 20 now crossing back down below the 50. All right, we do have some MACD starting to curl up. We do have a slow stochastic starting to move up higher again, but still way below 20. So this needs a lot more work. So this chart isn't anything really to write home about for the bulls at all. Okay, next is going to be the GDX itself, and here's that GDX bullish percent index, and here's the ratio, the GDX GLD ratio, and you can see that's starting to move lower. Remember, guys, usually GDX, the miners, they bottom first, so they move first, and then gold follows behind it, and then gold, the latter part of the move, starts to pick up momentum. So I'm watching the miners very carefully, but you can see here there really is nothing really to write home about. I mean, this is clearly in a downtrend channel, and every time it hits the bottom, it rallies back down again, rallies back down again. I mean, it's clearly definable. This couldn't even get up to this channel, and now we're back up again, and then we failed miserably on Friday. So to me, I think you get one more shot. I think you get down to here right around 16 and a half. Now, yeah, it's far cry at the moment, but even if you got down below the channel and based a little bit more, I just think it's a little too easy, and I do think that that's where they get everybody involved. They get everybody long gold, and then that's when they flush all the weak hands out. Okay, so just again, a word of caution. That does not mean you can't trade it short or long intraday. This is just a longer term video, a longer term picture for 1 to 3 months out. Now, here is the gold monthly chart. 8 and 20 identified that bull market in 2002. We had that beautiful move up. We got that cross at the end of 2012, and we got a cross up higher. But I want to show you this here. Just grab that one more time here. Now, if you look, we did get up the 8 and 20, but now I think that gold can actually get up to about 1050, 1100. Okay, 1050, 1080 is really going to be the spot. Now, if it can do that, that will give you a better long entry right up in here. That'll be the double test of this double bottom, and then off to the races it goes, taking out the highs. I think it's absolutely possible. So I'd rather be patient on gold. Gold is notorious of flushing sometime around February, March as well. Seasonality will tell you that. So maybe it rallies a little bit more and then starts to sell off again. As far as building a position in gold, if you have obviously a large size account, you can do so at any moment. But if you don't, you got to be more precise. I think I kind of sit it out and wait out a little bit more. Here's the weekly chart of gold. You can see gold caught that downtrend line right to the penny, and now we're rolling back down again. So 1080, and I'm going to show that to you right now. Matter of fact, let's get right to it. Last chart is going to be right here. 1120 was the first target. We just missed it by a few dollars. 1100 and 1080, and then ultimately 1050 would be back down below here to the lows of 2016, near the lows anyway. You could see money flow starting to come in. That's great. Stochastics, MACD starting to curl up. RSI curling up too. But what is this here? Basically, guys, it's really just another bear flag, right? I mean, really, that's what it comes down to. We fill the gap. Here's another perfect bear flag pattern, looking for lower prices somewhere around 1100. So I'm not really too convinced as far as what the technicals are telling me on gold at the moment. What I am looking for is more evidence as far as price is concerned, volume, and of course our indicators to see, and of course the dollar, because the dollar is going to be a significant factor in the commodities and for stocks for that matter. Okay, so just keep an eye on that. But I think just like we did here, we had to move up, everybody got long, and bam, we literally just got crushed. So I'm looking for one more flush lower, and that should give us the local low in place that we could start moving higher and make higher highs and higher lows going into 2017. Have a great day, everybody. Talk to you soon.